Is this the end of the major trend in Apple that started in 2009, or is it going to be up in this range right here? And so this to me looks like another one of those zigzag corrections playing out. Let me show you what I mean. So we have, let's see here, it looks better on a 1 hour chart. Yeah, there we go. So we have this kind of 1, 2, 3, 4, 5 waves down, 1, 2, 3 up, then another 1, 2, 3, 4, 5. So we have 5 down, 3 up, 5 down. That's concerning, because the reason it's concerning is because if we are topping here, it would likely be in the form of some kind of a 5-wave change of trend pattern, right? But that green count would have us in this kind of 1, 2, 3, 4, 5, 1, 2, 3, then a 5-wave pattern down into this range right up in here. What is that, like around 159, 152? We really need to hold in order for this final swing higher to manifest. I don't want to see us go below 140. What is that, 148? We can't go below 148. And the way these zigzag patterns happen, these corrections, which it looks like this is probably what's playing out right here, is they tend to be more than the C wave tends to be longer than the A wave. Where typically when these patterns, we're looking for a symmetrical move. So A, B, and then C would be right here, 163. More than likely they go to the 123, 138, or 161.8. And they do so in a pretty sharp fashion. So just be on guard down in this range. If we get 5 waves down, we hold this range and then turn back up in 5 waves, then that's very bullish. That means that we're heading to new highs with Apple. But if we break below this 148 level, that's game over. And we're going below that January low if that does happen. So it's less obvious to me with Apple than it is with Microsoft right now, and with like regional banks. But this is one to definitely keep an eye on.